Hey traders, and welcome to today's video. In today's video, we're going to be doing a recap of a dollar Swiss trade that we took advantage of last week and that was posted last week in the structure-based trading series. To start the video, I'm going to show you guys a clip from last week's video. We're going to talk a little bit about the analysis that went into this trade. We'll also be taking a look at a few other trades that we had in last week's structure-based trading video. And if you guys would like to see that video, then there'll be a little card pop up in the right corner of your screen right about now. You can just click that and there'll be a link that will take you to Structure-Based Trading Episode 4. If you guys are new to the channel and you'd like to be alerted when I come out with new structure-based or any new Forex educational material here on YouTube, then make sure to click that subscribe button while the intro and disclaimer roll. Click that like button for me and I'll see you guys on the other side. Alright guys, so as I said in the intro, we're going to start off this video with a very short recap of last week's Structure-Based Trading Episode 4. So let's take a look at that now. So as you can see, we're on the daily chart of the dollar Swiss and we're looking at a few different key levels, one of which the market is at right now, which is this resistance level you see here. And we'll go ahead and drop down to some smaller time frames and see if we find any kind of double top or entry reason here. Obviously I already found an entry reason, but we'll do this for the sake of this structure-based trading video. So in this case, this market has come up to a previous level of daily structure. Directly after hitting that daily level of structure, this market put in a nice double top, which, considering the rules that we're using today and the rules that we're using for this structure-based trading video, that would have been our entry. And so far, alright guys, welcome back. So here we are, as you can see, back on that dollar Swiss chart, and after hitting that daily level of structure and putting in our little entry reason here, the market is now pushed down over 200 pips, giving me over a 4-to-1 risk reward on the second part of my position. Now we are down here at a previous level of support, and if the market gives me any reason to exit this trade down at this level, then I will be doing so. So let's discuss some of the reasons why this trade made sense. Not necessarily why this trade won, but why did it make sense? Because in reality, this trade would have been a great trade whether we won or lost the trade. Because the same analysis is going to go into the next trade, and the same analysis went into the previous trade, and some of them have lost while some of them have won. So what's the difference here? The truth is there is no difference. So I say that to tell you guys that just because you lose a trade, as long as you do your analysis correctly, does not mean that you necessarily did something wrong. We all too often associate losing money with being bad at trading, when in reality, if our analysis is consistent and we have a strategy that is consistently profitable, proven to be consistently profitable, then if we consistently perform that analysis, we should eventually get back on top and be profitable. So let's get into why this trade actually made sense, guys. One of our most important reasons for taking advantage of this trade was the fact that we were at a daily level of resistance. If I zoom my chart in here on my daily chart, you guys can definitely see this major resistance level on the daily chart. And in a previous video, I've mentioned that the analysis in most cases is much more important than the actual entry reason. And in this case is no different, guys. If you noticed from the clip I just played from last week's video, in these structure-based trading videos, normally I will look at double tops and double bottoms as the entry reason. Now, with that being the case, do you guys think if we just took every double top and double bottom that it could be a profitable strategy? So what was the difference for our double top from last week's trade? Well, the difference is that we took this trade at that previous daily level of structure. The truth is, guys, if you're just using one candlestick pattern, price action pattern, without actually having and incorporating an indicator of some kind or previous structure or other reasons to enter that actual trade, like breaks of structure, then the chances of that being a consistently profitable strategy are actually pretty slim. And there's another even more important aspect to strategies. More important than looking at structure on higher time frames, more important than any indicator we use, and more important than any kind of candlestick pattern we use for our entry. And guys, that is psychology. The most important part of our trading, no doubt, is going to be, can we stay consistent with a strategy? Because what is the use of having a strategy that can create good situations like this one create 3-to-1 risk reward, 4-to-1 risk reward trades. What good is this kind of strategy if you can't consistently perform it? If you just win one trade and then once you have 2 or 3 or 4 losses in a row, you completely stop trading this strategy because you believe it doesn't work any longer, and you move on to another strategy. And the situation repeats itself. I'm sure this story is starting to sound all too familiar for a lot of you. I know it is for me, because this is absolutely normal to see with most new traders. I've seen this all too much with some of my clients, and as I said, I've seen it all too much in myself as well. Most new traders are going to start with a strategy. They're going to have a few losses in a row after starting that strategy and move on to the next one, where they'll have another few losses in a row. They'll stop, they'll move on to another strategy, having another few losses in a row there, moving on yet again, and eventually completely demolishing their account. And as you guys can see, this was a very successful trade. Over a 4-to-1 risk reward, over 200 pips. But what if I was to lose the next 3 or next 4 or even the next 5 or 6 trades in a row that I take using this analysis? What do you guys think I'm going to do? I'm going to continue to trade. And there are only a handful of ways to actually gain the confidence to be able to do that. The most efficient is to backtest the strategy, guys, and that's what's going to help with your psychology. So let's play another scenario. Let's pretend that you've backtested a strategy. Let's pretend you've backtested this strategy and you saw through your backtesting data over the years that this strategy lost 6 times in a row at one point, putting you in a 6-trade drawdown, losing 5, 6, 7% of your account. But then by the end of the year, this strategy ended up being extremely profitable. Now that you're in that situation and you have that knowledge of previously tested data, how do you react to 4, 5, even 6 losses in a row? Do you think your reaction would be different than most traders starting out? Different than someone who's just starting out and lost 5 in a row and completely switched strategies? Well, hopefully it would. Hopefully you would see that through your backtesting you've had situations like that, and you'd have the confidence to power through what we all in the trading world call a drawdown, which is inevitable, guys. There's no strategy without one, so it's something that you'll have to learn how to deal with, and that is why trading psychology is going to be the most important aspect of your trading. And guys, I honestly did not mean to go on a rant about emotions in our trading, but I think it's always good to throw that into some of these videos so that you guys understand that it's not all about strategies. I know I do a lot of strategy tutorials here on my channel, but your psychology as a trader is going to be just as important as the strategy you use. And guys, if you need a little help on your journey to becoming profitable, if you need somebody that you can talk to about trading and ask questions, and if you would like to learn a few of the strategies I use in my personal trading, then for those of you interested in that, and I'll leave a link in the description for one of my training programs labeled EAP. And if not, then that's okay too, guys. I'm going to continue to post good trading content here on YouTube. Just make sure you are subscribed to the channel if you're interested in being alerted about that. So now that we've taken a look at this dollar Swiss trade and how it's played out, we're going to move on to a couple of other trades that we looked at in last week's structure-based trading. Last week we took a look at the euro dollar, and I'll go ahead and zoom out to the daily chart. Our drawings are actually still on this chart, guys, and if you'll remember from last week's video, again, if you've not saw it, then there will be a little card pop up in your right hand corner, and you can click that to get to last week's structure-based trading video. Last week we were looking at this level being support, resistance, and we were looking at this as a trading opportunity to be support again, and as you can see, my trade has actually already hit first and second targets, which is why there's no position on here, but this trade did bounce off that level we were talking about last week. Drop down to an hourly chart. It put in a nice, really a head and shoulders pattern right in here, and we were able to take advantage of this big move up, hitting first and second targets on this trade at both of our previous levels of structure. These two red lines represent the levels of resistance that last week we talked about taking targets at. Now let's move on yet again to the Aussie dollar. Last week on the Aussie dollar we took a look at this area in blue. As you can see, all my drawings are actually still on this chart as well. This area of blue is an area we expected the market to rise from, and it has done so. From that area going down to an hourly chart, we did actually have an entry reason here too, but I was unable to take advantage of that because I did not see it in time. As for the recap of the dollar Swiss trade, guys, great trade here. Using only structure-based trading analysis, going out to higher time frames like the daily chart, looking for support and resistance levels, and then picking an entry reason on a lower time frame. If you enjoyed this video and if you think it brought some value to your trading, then please click that like button for me. It really helps the channel and I would really appreciate it. Again, make sure you're subscribed to catch my next structure-based trading episode, along with other free educational content about Forex trading. I've just released a new strategy in the EAP, so if you guys are interested in learning that strategy, and if you're interested to see what is involved in my training program, the EAP, then I will leave a link in the description below the video, and also that will be attached in the cards to the top right corner of the video for any of you that want to check that out. And otherwise, I'll see you guys in the next video.
Like me, it drifts away. I would watch you stare. I would watch you stare.